Welcome to Remarkable WAM.
Across the channel, so we're going to run out of eggs and bread and cheese. It's the end of civilization.
I'm not in the UK, but you know, they're already starting to blaming it on the French, so I think it's all going to go very well.
Oh, really?
Yeah. The Telegraph has this big article that, you know, if Brexit doesn't work, it's because the French are being evil. It's not, you know, Brexit was a great idea, but like it's the French who are being a pain. And then now it's the French who are cutting the border, and you know, because of a virus, and then it's the French that cuts everything, and so it's.
You are omnipotent as ever.
It's the I think that's the Telegraph's MO, though, isn't it?
Yeah,
I mean,
it is.
There is a problem. It's got to be the French.
Yeah.
Yeah, that's right. I banged my knee.
French.
It must have been the French.
If in doubt, blame the French, because that will get everybody going again.
Oh,
Yeah.
no.
Well, we need French for innovation. I mean, if only they had a word for entrepreneur.
Who said that?
That's really my favorite one. It's George Bush.
It was George Bush, yeah. But
George Bush said the French people are useless. They don't even have a word for entrepreneur.
I don't know if it was part of a stand-up routine or an after-dinner speech, or genuinely he was making a point.
Yeah, or the speechwriter wanted to take the piece or something like that.
Yeah.
He didn't give him his bonus, the guy said, yeah.
Anyway, you can't coach that kind of comedy. Well, Chris, we're all yours. It's 4:30. And is Ludo aware that we've got back-to-back podcasts?
He knows. And he's also said to me, I'm going to have to do my homework, but I don't believe him.
No, I didn't do anything in the end. But I'm not. It's only the sound you're taking, right?
No, we'll take you physically as well, visually as well, if we like.
Okay. Because I haven't been at the hairdresser for weeks and.
Well, it only makes us look okay, Ludo. That's the only chance we've got against your French debonair, suave sophistication.
Yes, I understand.
You're pulling it off, Ludo. And
there is noise.
It doesn't make good for good radio, Chris, but I've realised the last time we were speaking and we were podcasting, I was wearing this shirt in a similar jumper. And for our listener at home, I have washed the shirt and I own several of these jumpers. So I want you to know that you're in good company. All right, it's okay, Ludo.
That's quite all right. And all we're going to do, Ludo, is have a chat. I'll talk to you a little bit about your history and how you got to where you are now, and then a little bit about the future. So if that's okay, you happy with that?
Yeah.
Cool. Shall I kick off, Andy?
Yes, I'm ready to go. Although these informal bits of banter will form bits of our intro.
It is always much better that way. But
we'll just drift into the conversation.
Exactly.
Let's start the timer.
Exactly. So look, to formally kick off, look, my name's Chris Mills. Together with my friend Andy Reid, we are your hosts in this ongoing podcast or vlog, depending on whether people let us see their face or not. But thank you very much indeed for joining us. This is Remarkable WAM, and that's Remarkable Wealth and Asset Management. And we'll be hearing some more remarkable stories, activities and initiatives from remarkable people working in WAM. So Andy, I'll ask you first of all, before we get to our guest, how are you today? You've been busy, going well?
I'm very well. I have been busy. I have also been going through some statements from my self-invested pension pot, my plan. And I'm being descriptive here. I've got some letters from Standard Life.
Excellent.
Did you put all your money on Tesla?
Say again, Ludo.
Did you put all your money on Tesla?
I've got my money on, I don't quite know what I've got my money on. I've got Hargreaves Lansdown has sent me an impressive pie chart where it's all been split up. In terms of colour, it looks like Wheel of Fortune, but I'm not quite sure what's going to happen there.
These projections, usually projections look like fortune.
Well, fortune favours the brave. And as we said earlier, Ludo, if only the French had a phrase for entrepreneur.
But
I'm good.
Andy, we're as we said. I mean, this series, to your point, we're trying to inspire a new investment landscape, trying to think about how we should better communicate this, something that's fit for purpose for everyone, not just the learned few or those that are on the inside. But today, I think, let's introduce our guest. We're joined by Ludo Phalippou, who studied, now please tell me if I get this wrong, Ludo, who studied economics at Toulouse and the University of Southern California before achieving a PhD from INSEAD. And you are currently a professor of financial economics at the Side Business School at Oxford University.
That's right.
Excellent. You are a leading expert. You've published many papers, at least 3,102 citations, I believe, from having looked at Google research, and has become a strong commentator on the private equity market. His book, Private Equity Laid Bare, that I couldn't find as a prop, and I'm gutted. Private Equity Laid Bare is subtitled A Myth-Debunking, Non-Boring and Never Complacent Textbook. And back in
available on Amazon.
No, it's true. I'll have to
delivery
find it
next week.
And back in the summer of 2020, the Financial Times wrote an article on private equity barons and quoted you saying that this wealth transfer from several hundred million pension scheme members to a few thousand people working in private equity might be one of the largest in the history of modern finance. Is that fair? So how are you today, Lulu?
I'm good. I think it's fair. I think I was attracted to private equity 20 years ago because I think I have a natural attraction for bullshit. I think I get attracted to when things smell like not right or bullshit. And so there was lots of strong statements about private equity. And so then I was naturally thinking that sounds a bit implausible. And so let me have a close look at this. And then indeed, each time I lifted something, it didn't look quite what it was written on it. So yeah, and then the latest piece was a bit like the conclusion of his 15 years of work on the field of fee and returns in private equity, whereby the picture is by now very clear. The private equity performance is not bad. It's about the same as similar stocks. It's not a catastrophe. It's not like people have lost their shirt on average. But what is clear is that there are quite a few billionaires that were printed for this, and these are not small amounts we are talking about. And it's often difficult for people to picture things, but just the funds from vintages 2006 to 2015 in the US only, it's 230 billion, not on fees in total, just carried interest, meaning the bonus payments to the managers in the private equity industry for good performance. But again, it does just match the stock market. What was $230 billion? If you would add up all the other bonuses for other years, for the rest of the world, etc., you'll be at $500 billion. It's $500 billion ended in to individuals, not to cover any expenses or anything like that. It's just bonus for having performed well, and they haven't performed badly, but I wouldn't call that amazing performance. And so that's what led me to say this is like a huge wealth transfer. But on top of that, there are all kinds of other fees, but part of these other fees are to cover some costs. But so there is more than that. But at least this is a pure.
So can I ask? I mean, look, we first met when you taught me half of this stuff. You taught me all of this. This was over at Side Business School, I remember. And just for those that hadn't had the benefit of your teaching, how would you? And for the average person, and I'm not using Andy as the sop for this, obviously, but he is. How would you? How would you describe private equity in simple terms? Where does it begin and end?
Private equity is an industry where a bunch of people make one simple proposition.
Right.
They go to people with money and they say, "You give me your money, I'm going to buy something with it, and then I'm going to try to make as much money as possible with it and as fast as possible and return the money to you. Mm-hmm. And for that, I'm going to take a big cut when I do very well." Okay. So what that means is that it's like, it would be the equivalent to someone telling you, look, I know which building to buy in London, give me your money, I will spot the building, I will refurbish it, I will make it look very good, within 2 or 3 years time I resell it, and then we'll make a killing, right? So that's exactly what it is, except they don't just do it with buildings, they do it with amusement parks, they do it with fitness clubs, they do it with dentists, they do it with clinics, they do it with nursing homes, they do it with airports, with everything. The goal of the game is I pick up something, and in 2 or 3 years time, 4 or 5 max, I sell it at the maximum amount of money possible, and we split the gains. And so it's a purest form of capitalism. It's really the economics 101 for-profit run organizations that you end up with. Because what happens is, for it to happen, they go to a management team that is either in place or who they appoint, and they say, listen, you're going to be put, we can take a simple example, you're going to be put in charge of Arsenal Football Club. And you're going to put your own money onto this if you tell me you know how to fix it, right? So imagine you have somebody like, Pep Guardiola that says, you guys at Arsenal are losers. I know how to fix this club, okay? Then you go to Pep Guardiola and you say, you put half of your personal money onto this. And the deal is going to be, if Arsenal is losing any money, it will be your money going out first. And if they make money, then you'll be extremely, extremely rich. We're going to multiply by 10 or 50 your wealth. Okay. And so the deal is very much of this type. It's like you go and get the very best guy. You say you put your own money where your mouth is. And if it doesn't work, you will lose big time. But if it works out, you're going to earn amounts that are unearnable anywhere else. So orders of magnitude, the management team in a mid-size private equity transaction in the UK can walk out with 10, 20, 50 million pounds. That would be like for a 4 years gig. So that's the sort of money that we are talking about. And so that's the sort of deal. You come and you put 1, 2 million pounds of your own money. And if it works out, you will walk out with 20 or 30 million pounds. And if it didn't work out, then you lose your money first. And then if there is, if we have lost a lot, then more people will lose money, but you'll be the first one to go down. And so that's very much the spirit. Like the management team is going to be full gas on trying to improve the value of his company as much as possible. The people who channeled the money from the investors, the people who had the money, to the company or the football club will also be incentivized the same way. And so that's what it is. It's just, and so you can achieve the best, right? Because what's going to happen in its mindset is that you avoid, people, sleeping and taking it easy, maybe like Arsenal right now, and you get people who are like full gas because like their life depends on it. Okay, like they have to turn this over, otherwise they are ruined. So
just a point of order: Arsenal women are brilliant. Arsenal men are not doing very well. Just
since the French have left.
Exactly.
I think that's another fact. Of
course.
Yes,
exactly.
So I don't follow football, which is my reframe on that. It saved me thousands of hours in my life down the pub talking about missed goals and opportunities. Ludo, in your story there seems to be 3 elements that would make for a perfect private equity formula. Then there's the large amount of capital up front to go and invest in a company or an asset, be that a set of care homes or a building or an airport or whatever you say. There's the company itself, the actual thing that people want to go invest in and see get bigger. And then the third and final component is the management of the relationship and the growth strategy associated with both. And you take one of those 3 elements away, or if one of those 3 elements aren't as fit as the other 2, it appears that private equity formula is broken and ultimately compromised. Is it as simple as that? Is there opportunities?
So there are 2 places where there is a bit of a bump on the road.
Yeah.
The first bump is the first deal where this guy who comes to you and say, I know which building to buy in London, refurbish it, make a lot of money, and then we split. That guy is the guy who's becoming billionaires. These are the billionaires being printed. That guy is a billionaire. But the guy who money it is not earning much more than anything else. And some people say, well, that's what is to be expected. If a guy is really good at finding the right building, refurbishing, and so on, why would he reward the person giving the money? Money is a commodity, it doesn't matter.
Right.
So the guys giving the money are not becoming rich. They are just getting like a roughly fair deal, okay? But there are these guys who are doing this intermediation, getting extremely rich. So that's the first bump in the story, but it's not like as smooth as we all grow the pie and we all getting rich and it's great. So the first bump is that it's a bit of a rough deal for the first guy, the guy who gave him money. And the other bump on the road is that probably you wouldn't do too much harm if you were doing a private equity ownership of Arsenal. Sorry to insist on that. But if you do it on a care home, it can be a bit tricky to go into a care home and say, I can make a lot of money with this. I can make a lot of money by like selling the building and then leasing it back, thereby like, you know, getting cash for the building. And then, you know, and if a care home doesn't do too well, then like the government is not going to let these old people die. And so they would kind of rescue me anyway. So if things go well, I do a killing because I, you know, sold all the building and got all this money. And if things turn out bad, then it's okay. The government will step in. I may also cut a bit to the nurses and things because, you know, like maybe I would save a bit of money here and there and make more. And so you can have instances where then this pursuit of profit at all costs will not go well. At the same time, you have cases where it may go well. And it could be that also in the nursing home, they come in and they say, you know, we need to make sure that these nursing homes are much better run than they currently are because I need to sell them in 3-4 years time and I need to sell them at a high price. So I want these things to be like, you know, 5-star quality ratings and so on and so forth.
So the investment
we don't know, but
to improve things. Yeah.
So they have an incentive to improve things. At the same time, it's not always in the best interest of society. So sometimes they will coincide and they will do amazing thing and that will benefit society. But in many cases, it will hurt society, and because they're going to pursue their own profit at full speed.
So Ludo, how, you know, I'm thinking about the difference. You got private equity, and then I guess, you know, in a very simple sense, public equity, and, you know, public markets, which is heavily regulated. How much regulation in comparison is there in the private equity space? Roughly?
There's basically nothing in the private equity space and tons in public market space. And it's interesting to take it from a historical perspective. Public markets started without hardly any regulation. And then years after years, stories after stories, you have a financial intermediary that took the money from someone, kind of diverted it to himself. And then this someone said, oh my God, look, you know, I just realized, you know, I was, you know, taken for a ride. And then we put a regulation in place saying, yeah, you're not supposed to lie to people. No, yeah, you're not supposed to do this. And yeah, you're not supposed to have kickbacks, and you're not supposed to like choose, you know, help favor some clients over others and so on. And so you have this piling up of regulation in the public market each time there was a scandal or problem afterwards. Mm-hmm. On private markets, we didn't do any of this. So you're still in the Far West, basically. Like, you know, and so the difference is huge, and it's weird because you have a lot of money from vulnerable people that are ending up in private equity and they have no clue. They don't really have any protection. So right now, if Andy is investing in Tesla, that might be the worst investments he may do today, but at least he's protected. Like nobody has lied to him. The numbers are checked. Nobody is going to like, if he goes via a platform to buy the stocks, he's going to pay £5 and all of his money will go into the stock of Tesla. If he does that in private equity, he has no idea how much money is leaked on the way until he goes to this company. He doesn't know. He will not know. So you have all these rules in public markets to protect the public, and there is no rule in the private markets.
And does, you know, as private individuals, can we access those markets easily, or not, you know, the private equity world? How do we?
Not easily, but more and more, because there is this myth that has been built around private equity having amazing returns and so on. And you can have this myth because if you don't have any regulation as to like how to present track record and so on and so forth, then it's easier to look good because, you know, there are not too many rules. So you can build a myth, and then you have tons of people who are desperate to invest in it then. And so what happens is that we see things like feeder funds, so like people with 100,000, 50,000 to invest, they can go to their bank and then they put a lot of people with this kind of money together, and then that's enough to get into a private equity fund. And you see some funds a bit on the lower end of things as well. Usually you need to have like 50, 100,000. You probably want 2 or 3 such investments. So this would be people that are in the million plus. There are quite a few nowadays, and so so we do see people in the million plus investing in private equity.
Yeah, and Ludo, the purpose of our podcast is to continually stimulate our listeners in thinking about how the landscape of investment can be shaken up and reinvented, and some of the inherited rules around investment that have, I guess, formed over time have become fixed and accepted, but with a little bit of creativity and provocation, we can perhaps challenge them and uncover new ways to democratize the wealth for the many. And listening to you so far, it appears that we've got a bit of a wedge in that there's a finite number of attractive assets to invest in that have a high potential to yield significant returns, and a very small number of people that have the capital available to invest in them. So it looks like it's a very exclusive club.
No, there are lots of capital. There's lots of capital. This capital is not scarce. The capital is not scarce. That's why they're getting a rough deal. Is that, you know, because most of the capital is pension funds, sovereign wealth funds, endowments. These people have tons of money. I mean, like the amounts are. So it's not the people with 1 million that are making a difference or not. It's you know, like one, you know, the one's Middle East sovereign wealth fund would be like $1 trillion, right? And then they would put 15% in, if they put 10% in private equity, it would be $100 billion. These are 100,000s with $1 million. So it doesn't matter, these people.
So I wonder if, in your years of research and reflection, have there been 2 or 3 areas where you think the landscape of private equity is ripe for innovation? Are there 2 or 3 areas where you think, if I could cast a bit of creativity in these areas, I think the opportunity to come up with new models and a shift in paradigm?
Yeah, I felt that more like what I had in mind kind of has happened a bit and is developing a bit, but slowly, is like these permanent funds. So funds with longer horizon, lower fees, doing kind of low-hanging fruit private equity. That's a bit what CalPERS had in mind too. We do see a bit of that. So we see it happening, but they don't get a huge amount of traction because of this myth that has been built around the incumbents, right? So the incumbents are protected by this myth that like almost everybody believes, and so you cannot have too much innovation because everybody believes that, you know, but there is someone out there walking on water. So like, you know, why would you innovate? And so little by little, you know, and then there has been more people saying, you know, like Chris said, you know, I think he was in my course 10 years ago. I'm a broken record. I've said the exact same thing. But the last 2 years, the difference is that the last 2 years, we've seen lots of people saying exactly what I've said, including like Josh Lerner at Harvard and all kinds of academics and all kinds of people in practice. People coming out of a closet and saying, look, I've been a practitioner for 10, 15 years. Here is the data, and this guy is right. And so there has been more people, yet you are fighting windmills because there are too many people out there with an interest in continuing with the myth, because tons of people are getting a lot of money by selling expensive products. So all the people, the drama of finance and a lot of things in life is that you go to people with knowledge to advise you, but these people will advise you things that works best for them. And what works best for them is the expensive and complicated thing. If you hire me as a financial advisor and I say, just put your money in the FT 250, in the FTSE 250, and you know, that's it, just do that, it will cost you £5 and you're done. And then here is my bill, you owe me $10,000 as advice. You're like, what are you talking about? Okay. If I tell you that things are very complicated, I need some swap contracts and I need to find you like, you know, open the doors to like Carlisle and so on, and I have contacts there that can allow your money to get in there and so on, and then I give you $10,000 bill, and you're like, yeah, sure, it's a bargain. So you have always these people with the knowledge, with an interest in selling you the expensive and complex solution, and that's a bit of a drama.
Because I guess fundamentally you haven't got an issue with the private equity process, which is private firms getting an inflow of cash in order to increase or advance or whatever, or buy a new football squad, whatever it might be. That's not the bad thing. So the capital flow is good. Is it more the sharing of the proceeds? That's the biggest issue, isn't it?
I don't know. I guess what is my primary driver, and that's maybe why I'm a teacher primarily and a researcher, is that it's taking out the bullshit. That's what bothers me. So if people have the right data, if they look at the right things, if the information is correct and people are educated and informed, in a sense, whatever they decide to do is like whatever. It doesn't bother me. I don't have any issue. I'm not deep enough a thinker to know whether it's good or bad that private capital goes through care homes versus the charities. I don't know enough. I don't have the tools to judge that. But there is a lot of bullshit out there, and out of this bullshit, we see a lot of people making a lot of money, and that bothers me. It doesn't bother me that Zinedine Zidane has hundreds of millions. Like we can debate whether it's fair or unfair. He should have been taxed more, taxed less. Like this is, I'm happy with accepting any opinion there. But his wealth is not based on bullshit. So that's a different division. But you have tons of people that are extremely rich and usually arrogant, as arrogant as they are rich. But they don't, a lot of what they have is based on a massive pile of BS, and that I cannot stand. And
I guess I can understand that, but it's also the point is that the private equity world, if those people have skills in identifying growth areas and areas of yield or performance over short, medium, long time frames, it doesn't matter, then they deserve to be rewarded for that if they're doing it on behalf of Mrs. Miggins and her pension. But I guess, and that's a virtuous thing, but what's wrong is, as you say, easy advice charging too much for it. It's not value for money, is it?
If at least everything was transparent, everybody was conscious about what they are being charged and they accept the deal, it's fine. And often people say, but everybody knows the deal, and it's not true. Like nobody understands these 200 pages of limited partnership agreement and all the latitude and discretion that it gives to a fund manager, etc. So it's not that people, and then the people are all intermediaries. So it's your money in your pension fund, and the person who's making these decisions is not that person's money. So it is a lot more complex than saying, everybody has all of the information, it's all fine. It's not. So first, they don't have all the information, and two, people are conflicted because they are managing other people's money. And so that's the issue, that we don't have complete information. Not everybody has full visibility and education. And that's a problem. If indeed, somebody says, I buy Debenhams, I put some of my own money in it alongside some other investors, we sell Debenhams at twice the price we bought it for, and then I put 10 million and I make now 20, that's it, then that's clear. It was clear ex ante, that's the deal. The guy bought a piece of Debenhams, he doubled in value, he got double the money. That's, everybody understands that. There's no BS. I have nothing to say. But if somebody has a kind of a deal where they get 20% if things go up, but if things don't go up, then they don't lose anything, and but they make you believe that they have like skin in the game and interest our line, and then in fact whenever they get their 20% bonus, it's not a bonus, it's really like a capital gain, so they should be taxed at 20% while the rest of humanity is at 50%, and so on and so forth, and like it starts getting a bit itchy for me.
Ludo, in
I can understand.
got a stat here. The play, the William Shakespeare play Macbeth, has 18,000 words, and the average the PayPal terms and agreements are 36,000 words. I'd be interested in understanding how many words are in the sort of the private equity small print that actually form an agreement. So there seems to be a growing trend in complexity that could justify people charging high sums to defab.
Yeah, I love this topic. I'm currently working with, there is like some cool stuff happening in Oxford where we put like teams of students who are in the law school with teams of students who are in the computer science school. And they work together on trying to find technological solutions to this, like trying to summarize these documents, detecting, the convoluted clauses or anything like that.
Brilliant. All right, and so
take
that further then, as if you not, this isn't an assignment for your students, but if you look back on all of the things that you recognise are ripe to be innovative, and I gave you the magic wand, what would it be that you would cast across this private equity landscape to make things a bit more simple and accessible to more people for the good? Okay, and I'm asking that not because Chris and I are Robin Hood and we want to pull down the private equity market and cause chaos, but we're doing it in the sense that we intuitively believe there's an opportunity for things to be better and simpler and more accessible. All right, so what would be your simplest?
With my wand, the first thing I would do is that I would give a copy of my book Private Equity Laid Bare to everyone, and then with a second shot I would get it absorbed by people so that like they completely understand everything that is in there. Right? I think would be like really welfare improving.
Okay.
I've also just released a dictionary of private equity for Christmas. You can maybe still get it. The dictionary of private equity to understand all the jargon and all these things, and I made some definitions quite funny as well, so it can also be a bit entertaining.
Isn't the hockey stick something that you give people with when your returns don't go so well?
Yeah, because the hockey stick is the shape of the projections of returns for everyone, right? And so you say, that's the stick with which you beat up the analyst when realizations didn't match the projections. So that would be certainly something I would do. Like but that means more education, better education. Like people like get all of that. And then one of the things that I thought a few times, but I haven't managed to lay it down, and would be like what the simplest contract possible would look like. I do have a paper that I released that gives an example of what it could look like for one of the clauses. But I haven't worked out the 250 pages, how you could boil it down to 10.
Is there ever, do you see a world where there's the one-page contract?
And it's not the trend. So that's the thing, right? Like the iTunes conditions are getting longer and longer, right? Like if you buy a piece of music on iTunes, it just keeps on getting longer. So I don't know. I don't see any, that's not the trend. It looks like...
But there's the other trend in simplicity is we're all familiar with our phones. I don't believe anybody is listening to this without having within a meter away from their mobile phone, maybe listening to it on their mobile phone. And on this device, within a matter of touches of a thumb, I can access, applications that monitor my health, my well-being, my banking transactions, my family affairs, my insurance, my travel, everything, apart from maybe my long-term financial future. So do you see there being a world which is the private equity app that's easy and as accessible to operate as my fitness app or my...
So the way that it's very much a French mindset. The big difference there are two big forms of law codes in the world, is the French law and the English law. Mm-hmm. In the French law, the idea is always that you create a template and people can just fill in the gaps. So you say, this is a one-page template for any commercial agreements, and there are 10 dimensions people can choose, like you put here your fee, here this, here that, and you have 10 parameters you can choose, but the template is like the same for everyone, period. It's a very much like French mindset, so that's the French civil law approach. The common law approach, the English one, has always very much be like, let everything happen, and then at one point there will be a judge and a jury that will decide whether it was okay or not, and they will set a precedent, and we build on precedent. And that gets more and more complex, because even in a university like Oxford, we have 700 years of precedent. So each time we need to take a decision, we're always like, oh my God, it's going to create a precedent. Then we take sometimes like decisions that are not optimal, but it's from the perspective of what precedent are we setting on this decision. And sometimes we have things like, oh, but 500 years ago, somebody did X, and so now it's kind of a precedent, so we have to continue. Like, that makes no sense. But you would continue it anyway. And so we keep on accumulating laws, and that's a trend everywhere in the world, also in France. But it's also a bit of a common law approach of letting the contracts just go on and on and on and on, And then to a point where even lawyers don't understand their own contract. They're not always completely sure. They take the previous contract that was written by a colleague, and then they change like the names in it and so on. They hope, they say the contract was tested in the sense that, it never went to court and was defeated or challenged. And so this contract must be kind of right. And they work with that. And if you bring a London contract to a New York lawyer, the New York lawyer will have difficulties understanding a lot of clauses because they will have never come across them. So it's a very weird world. And so indeed, if we could have a world of like French approach of having like a one-pager, there are 10 dimensions for your fees you can choose, and this is how they will be calculated for everyone, I think that would be awesome and totally feasible. But that's not the trend. But I think it would help tremendously. You would have the same contract for everyone, 10 dimensions you can choose. That's it.
I've seen, I think we may have talked about this before, Ludo, but I've seen some of my, some friends of mine be working in some service providers on smart contracts, in the PE space. And I think for a subset of the PE sector, they've actually managed to do, or quite close to that, get the standards down to
so it would be great.
50 data points, not 500, 50 data points that have been ratified by lawyers at one end, go all the way down the process through GPs, LPs, etc., to the auditors at the other.
I'd be happy to follow up again with them. Yeah, I'd be happy to follow up with them to see where they are on this project. Like I said, we have our students also in Oxford that are working a bit on that. I have some research projects on this, but it's taking time. It's non-trivial. And again, with my magic wand, I would need to make really people absorb the book, because if they don't have this information, they don't understand the emergency of it, right? If they think that everything is fine, so it doesn't matter. If it's 300 pages, you just sign it. Okay, that's it. You don't need to think about it.
I love the idea of blending different fields, because if there's one thing that's clear to me in the private equity world, it's a fiefdom, it's a niche, it's a world unto itself, and you should be blending different ways of thinking from different areas to enrich the whole.
Yeah, it's always very difficult, but it's always like a pretty sexy idea. And when we do it at school, it's pretty cute, because we see usually mainly female lawyers, like very well dressed, and then they're sitting next to the computer science guys who tend to have a different look, and they're sitting together, and they tend to be male, and having spent a bit too many hours in front of a computer, and yes, they try to work together around contracts, and that's very cute to watch.
It's probably like culture shock, isn't it? Both sides going, oh my God. So, well, it seems to me like it might be a good opportunity, Andy, if you're ready, to run through a quiz. Are you ready for a quiz?
Yeah, a quiz.
So my performance is I'm one up, Ludo. So even it's important to adopt a positive mindset when having an element of competition. But even if you beat me today, I'm still got a silver position. I've still got a draw, haven't I, Chris? With one already.
You have, but I think it really depends on the order which we play these. However,
that's true. I hadn't thought about that. So
you haven't lost yet. Let's just put it that way.
That's consistent. I haven't lost yet, and I'm not intimidated by a PhD from Oxford staring down the lens at me at all.
And as ever, there is an inherent bias in the questions that they may or may not rotate around the CV and the bio of the guest. Maybe some themed questions that the guest has a natural, innate advantage, okay?
Wow, the odds are stacked against me. But let's step into the quiz, confident in the unknown. So
Ludo, there's no essay question or no Viva or anything like that. It's simply multiple choice. So 5 questions, multiple choice. Andy has a chance. Are you ready? So here we go. Question 1. According to UN Comtrade, behind the US, the UK and Germany, who was the 4th largest importer of French wine?
Hold on. This is a very serious question. So,
I know.
The largest importer of French wine, yeah, and that's after you said US, Germany?
The US, UK and Germany.
Yeah,
right?
I know.
And then the 4th, is it, and here are the options: Hong Kong, China, Belgium, or Japan?
I gave you the answer without listening to the possible answers.
Well,
I put it in the chat.
have you? Well, did you pick any of those?
Doesn't make good radio, Ludo, if you say that.
That's good. So is that your
I
answer?
know, but I just want Chris to see that I'm not cheating, and I gave the answer before he gave the options.
Oh, hang on then.
I'm very impressed with this. That Ludo's. He also doesn't want to give you a clue. And
when you were reading the question out, Chris, I wrote down the word Australia, but that didn't become an option, so I'll cross that out.
Hong Kong, China, Belgium, or Japan?
Is this per capita or volume of wine?
Just volume, sheer volume.
Like the sheer volume of bottles moving from A to B.
Yeah.
Japan.
Japan is your answer. Okay. Next question. 2. What is the motto of the University of Southern California? Is it, and notice I've got motto because there are some Latin, some not. Is it the truth shall make you free? Is it palmam qui meruit ferat, which means let whoever earns the palm bear it? Is it Dominus illuminatio mea, the Lord is my light? Or is it Urim and Thummim, or even in Lux et Veritas?
I'm going to lose my degree. I'm not completely sure. I picked one. I think it's that one, but I'm not sure actually. Yeah.
Well, this is a good question. Do you want me to read them out quickly?
No, I like the first one.
Palmam qui meruit ferat, Dominus illuminatio mea, or Urim and Thummim?
No, Urim and Thummim. That sounds like an actress. I'm going for A.
Okay, Ludo's sticking with his under the table guesses. You're going for A, are you? Okay, Andy.
A.
Right, question 3.
Yes.
Blackstone is one of the largest private equity investors in the world, and as of September 2020, they had 548 billion assets under management, obviously on behalf of many of their institutional clients. But how much of that, and I've made it quite easy, to the nearest 100 billion,
yes, was
private equity? So they also invest in real estate and debt.
And have funds.
So was it 200 billion, 300 billion, 100 billion, or 400 billion?
I'm going
as well. Again, before you gave the answer.
I know, this is very impressive.
I'm going B, 300 billion.
You're going B, 300 billion.
Yeah. Okay. Ludo's gone 200 billion, hasn't he, for A? Yeah.
Question 4. According to CEM benchmarking earlier this month and reported in the FT, so they did a similar analysis to you, Ludo. So they examined 330 pension funds in the US between 1996 and 2018, and PE returns underperformed the small cap equity index. So Andy, the private equity underperformed, what you
stocks of a similar size, yeah.
Yeah, normal stocks by 67 basis points, which is just over 0.5%.
Oh dear. Okay.
What was the relative performance of in-house private equity funds versus those indices? So they could have gone to Blackstone or like CPPIB, which is what is that, Ludo?
TPPIB? CPPIB.
Yeah. Californian pension, isn't it?
CalPERS and Carstairs are the two main Californian pension funds.
So did they, with relative performance, were they 144 basis points up? Were they 14 basis points up? So a little bit. Were they 14 basis points down? Or were they 144 basis points down?
14 up.
14 up, is that your answer?
Yes.
I have the same one.
Ludo has the same one, but I want to point out to our listener at home, I said it before Ludo's answer appeared on the chat.
Because it took me longer to type it.
My answer rather than following the guy with the PhD.
No, neither of you are going to get any. Look, the adjudicator doesn't care. So, are you ready? Last question. And this might be very pertinent to Ludo. Who and when was the last French winner of the Tour de France?
Yeah.
So, was it Laurent Fignon in 1984, Greg LeMond in 1986, Bernard Hinault in 1985, or Charles de Gaulle in 1910? One of those might be a comedy answer. Just because the Brits might have won it quite a few times since then.
That's well, yes. But I mean,
yeah. And square and fair.
It's only fair that we should dominate the world of sports in two-wheeled.
Yeah, as long as it's sitting down.
Yeah.
Like rowing and cycling.
Yeah, it's true. What have you got, Andy?
Bernard Hinault.
Okay.
Yeah.
Me too.
What was his tire pressure? Come on, that would be for the bonus.
I think he must have run a bit under 100 psi, because back then they were putting a little bit less pressure on the tires when they.
What do they go to now then?
I would go for 80 psi as a guess, but it's a good question to ask him.
Excellent.
He's on next week. Right.
He would be impressed if you go there and say, I have a question, but I think nobody has asked you, like in 30 years of interviewing. I want to know what tire pressure you were running on the average stage when you won.
Yeah.
That would be very impressive.
Well, we'll remember that. Are you ready for the answers?
Oh, yes.
So according to UN Comtrade, the fourth largest importer of French wine was...
China.
Japan.
No.
Yes.
Japan.
Yes, you see?
Japan.
You got to be kidding me.
No, not at all.
I'm so sorry, Ludo. Are you ready? You might get it back this way. You ready? The motto of the University of Southern California.
I was not sure about that one. I think the Dominus something, but yeah, I'm not sure.
No, it was Palmam qui meruit ferat. Let whoever earns the palm bear it. So lots of palms in California. There you go.
And was the one I chose the one of Oxford or something?
Yes.
Dominus, Dominus is the one of Oxford? Yeah, because you rang the bell. I felt like this sounds familiar. But yeah,
you see, I'm sneaky like that. Caltech is the truth shall make you free. And Yale University has a Hebrew, Urim and Thummim, and Luxa Veritas. So light
Nothing to do with Thurman then. The actress. Nothing to do with that.
No, nothing to do with it. So neither of you got that right, I'm afraid.
Yeah, so I'm losing 1-0 to Andy.
You are.
That's right.
But look, it's
popping open my chilled French Japanese wine later.
Oh,
in celebration.
Blackstone, how much of their assets under management is private equity?
I would say 200.
And I said 400.
The actual answer is 189 billion, 200 billion. You're absolutely correct, Lilo. You are back in the race.
1-1.
Back in the race.
Back in the race.
Yeah, and then we have the same answers for the last two. So in fact, we're going to tie.
Oh, no. Well, the answer is the indice, the relative performance of in-house funds, plus 144 bips.
144.
Yeah.
I had 14, so it's wrong.
Yeah, they did very well. So they were even better. So CalPERS is doing a good thing. And you're right.
Did I say 144 though? Did I say B?
Oh, you said B. You said no, but you both said B.
Oh,
so you both got it wrong. So sad. And then nobody chose Charles de Gaulle in 1910. Unfortunately, he would have been 20, and I thought that was only reasonable. But it was in fact Bernard. So 2-all.
Oh.
Aye.
Well done, Ludo.
You need to have like a tie question or something. Like you need to have like an extra question.
Is there a spare one? Yeah, we can't go into a tie. Although you're definitely on my pub quiz team. When I'm invited to the University of Oxford to do an after dinner speech.
All right, we keep going, and I'll come up with a tie break because you obviously want a winner and a loser. I don't know why.
Yeah, it's like a very Trumpian view of the world. Like we need to have a loser
against me. Oh dear. So look, just to end with, Ludo, I've got 3 questions that I ping out and regularly ask people. We've asked half of one already, but I just thought it would be useful to round up a little bit. But in this private equity industry, which forms part of a larger sort of financial services, what's the one thing you would remove or stop? What would you, again, we talked about magic wand. What would you stop happening in the industry or stop?
NEBS. And it's nowadays, like if I could, if I can put a general statement, like if I have a genie coming out of a bottle and say you can remove something and say take out all the BS.
Right.
So, and there is a lot of BS in other parts of the industry nowadays. There is tons of BS around ESG and impact. There is all kinds of BS in all kinds of sectors of asset management. In fact, it looks like the entire sector is pretty much built on BS. So that's what I would remove. That would be enough to like collapse a few buildings, but that's what they are built on.
You're allowed. That's the question. I mean, we talked earlier about what you'd add. Some of those standards. Is that something is that the biggest thing that you would add or make mandatory? Transparency or standard?
Yeah, education, and then simpler contracts. People able to compare things, to know what deal is in there for them, to have the best, most accurate picture.
And before I ask my closing simple question, is there anything that we haven't asked you that we should have done that apart from talking about some fantastic books that you may or may not have written and are releasing very soon, is there anything else that you would?
Yeah, I thought you would ask me about my cycling, or that you would take a bit of interest in my personal life, but you didn't, so I was very disappointed. I think you could have asked about other things as well, like.
I merely quizzed you on those. It's true. I know that you are a keen wine cyclist. Sorry, I don't know what that,
A functioning cyclist.
Yes, something like that. So, but the last question I was just going to ask is who would be another guest that we should talk to? Who would you recommend would be somebody that would have a remarkable point of view, an interesting story?
There are lots of amazing speakers that I bring to my course, and I'm happy to give you a few names offline, not to put them like on the spot like this. I can suggest some people who I find impressive and inspirational.
No, that'd be fantastic, because we just like to have that continuity and continue that story.
And who are not as skeptical as I am, or they're much more positive oriented, and
we need a range. I didn't think you were negative. You just got
No, not at all. We need skepticism is healthy energy. Just skeptics are good at spotting out the opportunity to make things better. And I've been taking a few notes here over our last hour, Ludo, and I think the 3 or 4 themes that popped out were the need to educate, and actually education not only for the users but also the guys that are facilitating the private equity world. Simplicity in contract, keeping things simple and jargon free, and to do that, take out
in life in general, right? Like even for your conditions for iTunes,
absolutely. And elegance is a reward in and of itself, and the opportunity to challenge a few paradigms, and introduce just simple things that people understand: long horizons, low fees, guaranteed outcomes. Just simple principles, perhaps, that have got lost in the growing complexity of the world. So it's lovely to know that you're observing it and doing. I like the story of the work that you have in Oxford by getting the lawyers and the tech people to come together to challenge some of the status quo. So there's lots there. Thank you.
Do you want the tie-break question?
Come on then, Chris. Let's sort it out.
To the nearest $100 billion, what's the GDP of France?
The nearest $100 billion.
Oh my God.
$850 billion.
Look, you're only allowed to do. No Google searches. What's going on?
Oh yeah, no, I didn't do Google.
You put it out.
Googled it.
Chat.
Good idea.
The answer: 2,700 billion. Ludo, you are quite rightly crowned the champion.
What did Andy do? What did he say?
I yelled out 850 billion, which is not right.
So you were higher.
I was slightly above you. Yeah, I was not miles above you, but I was still at half the true number. But
Andy, you had the chance to stretch your legs out into the lead, and you brought crashing back down to earth. So,
Not by much.
I feel like a man that's got a flat tire yards from claiming King Mountains on the Tour de France.
I take 2 lessons from this. Don't ever try and compete against a Frenchman, and that clearly the legal agreements in France are so much better.
Yes.
So, Ludo, it's been an absolute pleasure. Thank you very, very much for taking the time.
Thank you.
Also thoroughly enjoyed your background of your homeland, which is far nicer than my flatlands that I come from. And I'm sure we meet again soon and talk, and hopefully move forward on your magic wand requirements for PE.
Yeah, and then hopefully at one point we will be out there free and be able to celebrate and have Andy giving a closing speech at Oxford University, and yeah.
I'm looking forward to that very much. So you have a fantastic Christmas and New Year, Ludo, and I'll see you.
Thank you. You too. Thank you very much for having me.
You've been listening to Remarkable WAM, a podcast that's part of a mission to shake up and explore wealth and asset management. For show notes and details about this week's guest, more episodes and further information about our project, please visit remarkablethinking.com. That's remarkable-thinking.com. My name is Chris Mills, and thank you for listening.